Short sales continue to plague our real estate market, and I still encounter people who don't really know what a short sale is, or maybe they have this misconception of what a short sale is. So I wanted to make this video to use a very simplified explanation to explain the basics of what a short sale is. And so let's rewind to the peak of the market, the housing bubble, and let's say that there's this person who wants to purchase this home for $1 million, but this person doesn't have $1 million of their own, so they have to go to the bank and try to borrow $1 million. And so let's say the bank decides, yes, we'll loan you $1 million. Not only that, you don't have to give us any down payment. And the borrower might be thrilled because, then they're not required to bring any money to the table initially. But what this is doing is not putting any equity into the home, into the property. They're doing 100% financing. And let's further assume that the loan they got was an interest only loan. And the borrower again might be thrilled about this because it lowers their monthly payments. They're only paying the interest and not paying anything towards the principal. But again, same notion, they're not putting any money towards equity in this property. So let's fast forward to today's market, and we know that the housing bubble burst, and housing market is down, and home prices are down. And so this same home in this market that this person originally paid $1 million for in today's market is only worth 800,000. And let's assume that this person was adversely affected by the economic downturn and is forced to move. Maybe they got relocated for their job or transferred or lost their job and are forced to sell their home. Well, the problem being that they still need to pay back the loan. And we know that they borrowed $1 million, but they didn't pay any down payment. And so there's no equity in the home. And on top of that, they didn't pay anything towards the principal. They were only paying the interest. So they were really paying no equity of their home. They still owe the lender the whole enchilada, the whole $1 million. And even in this market, if they were to sell their home for top dollar, the most they're getting is $800,000. And so that leaves them with $200,000 that they're short. And that's where the term short sale comes from. It refers to the amount that the borrower is short in what they owe on their loan. It has nothing to do with the length of time of the sale. Some people think a short sale means it's a quick sale, and it's absolutely not the case. They are very lengthy transactions, and I get into that in a different video of mine. So let's recap as far as the premise of where a short sale stems from, and it all stems from when a homeowner owes more on their mortgage or loan than their property is worth. And this is also commonly referred to, this notion is commonly referred to as somebody being underwater or upside down on their mortgage. It all means the same thing when somebody owes more on their mortgage or loan than the property is worth. And so at this point, the homeowner needs to sell their home, and one of the next steps they need to do is they need to submit a hardship to the lender. It's in the form of a letter and other documents that I won't get into too much detail, but basically they're pleading an economic hardship and a financial hardship and it's all for the purpose of asking the lender, they're asking the lender to forgive this $200,000 that they're short. So they're asking for debt forgiveness from the lender, basically saying, well, we'll sell this property in current market, but we're still left with this amount, in this case $200,000 that we're short. Will you, lender, agree to, basically eating this loss of $200,000? And at this point, the lender is left with that decision. Well, should we eat the loss and allow the sale to go through, forgive this debt, and then we're not left with this piece of property sitting on our balance sheet? Because the alternative is foreclosure, which can be very costly for the lender. And then again, they're left accumulating more distressed property that is not really ideal for them. And so that's the basics of what a short sale is and how a property becomes a short sale.